At Matthews Asia, we use innovation as a lens to identify good quality growth companies. Innovation is not only limited to high-tech products or breakthrough products. Innovation could happen across all layers of corporate structure. Also, innovation could happen across all sectors and industries. South Korea and China is leading in the EV technology. 90% of all the cars that's coming out in the next 5 to 10 years will be powered by batteries that's made by South Korean and Chinese companies. Also, China is facing a huge healthcare issue. China has one of the largest cancer patients pool and is growing. That's fueling the biotech boom in China. Technology is not always about top of the value chain innovations. Countries like in India, we find basic banking companies as one of the most innovative companies there. So one of the key ways to look at how innovative companies are is to look at their R&D spending. The total R&D spent by Asian companies are now bigger than the US or European companies. There are two big secular trends that's driving structural growth opportunities in Asia. Number one is emerging middle class. Number two is rising disposable income. As income in the region goes beyond $8,000 to $10,000 levels, we're beginning to see a different set of opportunities being created. And all companies serving Asian middle class is creating a major value for shareholders today, such as travel, entertainment, leisure, non-banking financials. Measuring innovation is a key part of that process of finding great companies in Asia. And there's a couple of different ways to measure innovation in a specific company. One way to do it is the qualitative measures. We look at their corporate strategy, we look at their marketing, we look at their management incentive structure. The other way of looking at innovation is quantitative measures. We look at their R&D spending in terms of revenue. We also look at how much of their revenue is coming from new products. We also look at the margin of those new products. To find great companies in Asia, just looking at innovation alone is not enough. Our equity selection framework has 4 major pillars. So when we evaluate secular growth, we make sure the company is a dominant player in an emerging industry. When we evaluate quality, we focus on sustainability of earnings and business model. When looking at valuation, we tend to be very patient, so we try to be very careful not to overpay for high quality companies. Asian market is already one of the largest consumer market in the world. But by 2030, we expect Asian market to be bigger than the US and European market combined. We believe that innovative companies that are creating innovative products for Asian consumers will be one of the major value creators for global investors for the next decade to come.